Oh dear. Hang on 1 second. We seem to have a slight problem. What's happened here? One second, please. We seem to have a problem. Do bear with me. Right. So sorry about that, everybody. What a huge technical problem then. All of a sudden, my camera went off. We had no connection. So my absolute apologies for the delay and for the technical hiccup there. Well, after all, like I say, this is indeed a live show. So these sort of things can indeed happen. Anyway, let's get on with it. In today's little program, I want to talk about how the market is licking its wounds from last week's shocking trading sessions and all the twists and turns we experienced last week. As well as that, I want to talk about what's coming up in store for us this week and all the exciting things there with that as well. But before we get into all of that, don't forget these little videos are for educational purposes only and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So yes, indeed, I want to talk about what an interesting week we have ahead of us. But before I get into that, don't forget the market is still really, really recovering from last week. And in fact, from the beginning of March. I mean, the Dow last week experienced its worst week since March 2023. Let's not forget as well as that, the S&P 500 has suffered a 10% loss since February the 19th. And in fact of the matter is, both the S&P and the NASDAQ have now experienced 4 straight weeks of losses. I mean, this is all to do with the fact that, okay, yes, we are got concerns of economic slowdown. And as well as that, we have the whole Trump's will he, won't he, with his tariff policies. Of course, this is playing into the mind of the market as well. Let's not forget, last week, and this is what really started to put the pressure on the market and at the same time actually boost gold. In retaliation for what the EU responded to the 25% tariffs on aluminium and steel for all countries, the EU bounced back with his own tariffs on, well, $28 billion worth of US goods. And a lot of that was also bourbon, you know, and that sort of spirits the United States sell worldwide. And Trump retaliated with threatening to do 200% tariffs on EU-wide. Now, it has come to a fact that the, according to the American Chambers of Commerce, this US EU Tariff conflict risks 9.5 trillion. I repeat that number again because it's frightening. This conflict between the US and the EU over tariffs risks 9.5 trillion of transatlantic business. This is according to the American Chambers of Commerce. Okay, they're not the only people, of course. The OECD is weighed in as well. They've weighed in with their opinions. So there's loads of people coming out, going, organizations saying this is bad news. And this is what the Organization of Economic Cooperation and Development had to say. Now, the annual GDP growth in the United States is projected to slow from its strong recent pace to be 2.2% in 2025 and 1.6% in 2026. Now, here's the thing. Before this whole trade war started, all this whole thing started, previous prediction was 2.4% in 2025 and 2.1% in 2026. Not 2.2% now in 2025 and 1.6% in 2026. So you can see, how this is really beginning to affect the market, pulling the market down. I say we'll pull up the market in a minute to have a look at it. But again, like I say, this is really worrying. One bit of news before we go and have a look at the market as well. Also happening, Trump makes another phone call, apparently, or will make another phone call. According to President Trump, where he said on Air Force One the other day, he does plan to speak to Russian President Vladimir Putin on Tuesday to discuss the ending the war in the Ukraine. And this is what he had to say. We need to see if we can bring that war to end. Maybe we can, maybe we can't. But I think we have a very good chance. Now, I think there's a lot of chit chat and talk about what the conditions of this, because they're pushing for a 30-day ceasefire. What this 30-day ceasefire could be. One sort of concession I think Russia is asking Ukraine is obviously guarantee that they will never, ever join NATO. Secondly, the land which is currently occupied by Russia, they keep, and that Ukraine calls a general election. I think it's a ceasefire, so there's got to be concessions from both parts. So be interesting to see how that plays out. But anyway, let's have a quick look at the market and see how it's looking before we move on to other news. Okay, so this is obviously the S&P. Like I said, it's been under humongous pressure over the last couple of weeks. And like I say, today, it is trying to get a bit of gains back. It's currently still trading way below that 200-day moving average, though, which, to be fair, that is the level if you want to see a proper recovery, which is around 5704. Market, a keen area of interest. Currently trading at 5647. I mean, looking on obviously on a bigger picture, look on the weekly. Okay, yeah, it looks like we might potentially, the market's being open now for just over an hour, hour and a half, hour and 40 minutes. So we are starting this week up with slight gains compared to the last 4 weeks, which is slight, a sign of encouragement, but still. If we have a look at the NASDAQ, again, NASDAQ's still under pressure, 19,655 points. Again, on the day, it looks like it's likely, potentially for now, as it stands, might have a day of gains. Let's have a look at the market in general with the Mag 7, because don't forget the Mag 7, excuse me, is really the driving force behind both the S&P 500 and the Nasdaq, obviously. So if we have a quick look, we've got, so obviously Tesla currently down for the day. So we're going for 30 minutes. So Tesla's down for the day, down 5.47% so far for the day. Meta also down for the day, currently down negative 1.29%. Microsoft, again, not so dramatic, but down 0.27%. Amazon down negative 1.47%. Alphabet down negative 0.60%. Nvidia down 1.92%. And finally, Apple down 1.12%. So don't forget, these guys are the big boys for the S&P and for the Nasdaq. These are the guys who've been pushing, obviously, the S&P up higher and things of this nature. So it does make a keen, but when S&P was doing its bull run, that is. So that's obviously a key thing. It wouldn't be a broadcast, of course, or broadcast of mine if I didn't talk about gold, obviously. Don't forget, gold hit. Got to put my light on with all the technical problems we had at the beginning. Don't forget, gold hit an all-time high on Friday of $3,000, etc. A little bit more than that, $302, $304, I think it got to. But yeah, about $304. Currently, a bit about profit taking, obviously down off the psychological level. Currently trading at $2,995.24 for the day. Let's have a look at it on a bigger picture. On the day, okay, yeah, again, it's still likely, above that uptrend, obviously, and still likely to close here with a gain. But like I say, I'm thinking it's a bit muted after those record-breaking run it did last week. Anywho, moving on to what's installed this week. Now, we talked about last week. We talked about how the market is looking at the moment. Well, one thing we've got to look at is what's happening this week. And this week is going to prove to be a very interesting week. Let's start off with some data we had today. Okay, data we had today. And that is retail sales, which came in slightly disappointing than expected. Okay, the headline rate was supposed to, the headline rate only rose by 0.2% versus the 0.6% expected. So still a bit of growth, but not as much growth as the market had hoped. As well as that, the January figure, the previous reading, okay, that was revised even further down to 1.2%, negative 1.2%, versus a 0.9% previously. So, we have some really big stuff happening. So as well as the retail sales, of course, like I say, it's an interesting week. Of course, we've got coming up Bank of Japan interest rate decision. Okay, expectation is for it to come at 0.50%. Previous number 0.50%, so the expectation is for them to do very little. As I've said before, though, Bank of Japan is a very interesting central bank to keep an eye on, as opposed to the other major central banks, i.e. Bank of England, Fed, ECB, Reserve Bank of Australia. BOJ may be the only bank in a position, or really in a way, in a position in some ways, to consider increasing interest rates as opposed to cutting them, like a number of the other central banks are. Other news this week, before we get to the big one. Other news, of course, we've got Wednesday, EU CPI year on year. Expectation for it to come in at 2.6%, previous reading 2.7%. But On Wednesday is the big one. And that is, of course, the Fed interest rate decision. Expectation is for them to sit on their hands and keep it at 4.5%. But here's the thing. Yes, I have no doubt they're likely to keep interest rates as they are. But the real big one, or the real big thing, what will be the press conference, which happens later with Jerome Powell. And this is going to be key. Okay. He is expected to use the word patience. Looking at economic data, we've got to be patient till we do our moves. But there's other things they're going to be looking into. Okay. They're really going to go through what he says in the report as well, and go through with a fine tooth comb, okay, to get any indications of any potential rate cuts in the future. Okay. Now, back in December conference or press conference when they did December interest rate, the press conference revealed that the consensus was that the Fed will only do 2 cuts this year. Before the December conference, the consensus was the Fed was going to do 4 rate cuts this year. And the reason why they reduced it down to 2 is because they said they're factoring at the point before Trump's economics kicked in, factoring Trump's expected economic policies. So they were saying that on what they thought he was going to do. Now they can see what he's going to do. So the market has changed its opinion a little bit. Okay. The market, and you can see this by this recent chart from Yahoo Finance and Bloomberg, the market is now currently expecting 3 rate cuts this year, as there's clear concerns that Trump's policies will hold down U.S. economic growth. Now, we already spoke about what the OECD said, and the Chamber of Commerce has said, and the general consensus. Don't forget the Fed of Arkansas and Arizona. They predict negative growth in Q1 for the US now. So there is now general consensus, okay, that the Fed might have to do something to try and put an injection into the economy. And the one way they could do that is, of course, reduce interest rates. So this is going to be a key event. If there's any hints that what they're thinking is true, that there will most likely be 3 interest rate cuts this year, as opposed to the 2, which disappointed the market at the beginning of the year, and then will indeed be 3 because of Trump in economics, so to speak, then yes, this is going to be a really big deal, or potentially a really big deal, and definitely worth keeping an eye on. On other things, the S&P interest rate decision as well, they are expected to cut down to 0.25, previous number 0.50. And wrapping up the week, of course, we have Bank of England interest rate decision. They're pretty much expected to do nothing as well, stay as they are, like the Fed and like the BOJ. So as you can see, we've got a very interesting week ahead of us. Okay, basically a week of interest rates decisions. We got pretty much 3 of the big ones, or 4 ones if you count the S&P. Okay, you've got obviously the Fed, Bank of Japan, Bank of England, S&P. So yeah, definitely a week of interest rates. But again, don't forget, like we saw last week, at the moment, the market is so unpredictable. It's all down to Trump's tariffs and Trump economics, which I'm going to start calling it. So that's going to be the big thing. Don't forget, of course, this is a live show. So you can talk to me anytime you wish, or just simply say hello. Let me know your opinion on what you think. I mean, what do you think of the Fed rate decision? Are they going to give us hints next week or next week on Wednesday on what they might do in the future? Or are they, are they not? I mean, what do you think, for example, of gold? Are gold going to carry on for a skyrocket? Do you think the small gains we're seeing in the market is going to go on all week? Just, let me know your opinions. Or ask me questions if you have any. Or like I say, simply say hi. if you like. Okie dokie. Don't forget, if you're watching me on YouTube and you like this sort of thing, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. As well as that, if you like this sort of thing, give me one of these. It's nice to know that you like what I do. As well as that, if you're watching me on YouTube and you're not actually watching it live, you're watching the recording, and if you are watching the recording, it was a fun first 2 minutes because we had big technical problems at the very beginning, which was a lot of fun. So sorry about that, everybody, and thank you for those being patient as I tried to sort that out. But anyway, if you are watching me watching the recording, by all means, put a comment below about your opinion, your question. I will see it, and I will answer it next time I'll go live, which of course will be tomorrow. So don't forget that. Okie dokie. If there is no questions or no one wants to say hello, not a problem. Not a problem. Don't forget, of course, then, wrapping up. Don't forget, these little videos are for educational purposes only, and in no way whatsoever shall be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.